Go live. Boom! Good morning, ladies and gentlemen, boys and girls. Morning for me because I just kind of woke up. We'll kind of talk a little bit about why later on. It's 12:30 p.m. Central Standard Time, so we're good like 3 hours late. Awesome. We're also getting packed and ready to head out and get ready to pick up the RTX 3050 on release day tomorrow. So, Lord willing, and the creeks don't rise, we'll have some benchmarks in regard to mining for you guys on that GPU tomorrow sometime. We'll also try to see if anything comes out here in just a little bit as far... Oh, I got a bug in my throat. As far as mining performance, I haven't seen anything right this second, but today's platform, we're going to be talking about kind of an opinion piece / a shift in the direction of messaging from Ethereum. We are going to be talking about miners continuing to ape into the market with their infrastructure. And then we will be getting into the mining profits for the day, as always, wrapping things up with questions and answers. Of course, first of all, for those, the super chats are the easiest to read, so they get answered first. They are never required, always appreciated. And then on top of that, if you just tag at Son of a Tech, it makes it easier for me to read those questions. So try to save them till the end, though. We like to get these topics more in like a video format style so we can clip them. And if you guys just need to catch up on a single topic, it's just easier later in the week. So first things first, though, let's go ahead and run the ad and then we'll get into it. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. Boom! Alrighty, so as always, we like to take a look at all of the miners. I basically have a list of them on GitHub just to see who's updated and who hasn't. We do have an update today from, of all things, XMRig, primarily surrounding Ghostwriter algorithm, which is Raptorium, and it's going to be version 6.16.3. Let's go ahead and go through the patch notes. As you can see here, it released yesterday, sometime after our stream. So it's Ghostwriter algorithm Raptorium. Here's some release notes. VAES optimizations not supported by basically this version due to old compiler. Please use this version instead. You have a RandomX benchmark. I guess there's some updates there. There's Kapow release notes, which is interesting. So added support for Ravencoin on NVIDIA and AMD GPUs, and removed the old CryptoNight GPU. Stay tuned about updates and follow. You can follow on Twitter. Actually, that's a good point. I am going to go ahead and do that now. Okay, I already am. I thought I was. All right, so you have a configuration wizard, management panel for miners, and for NVIDIA CUDA mining support, use any regular version with CUDA plugin. Here's some fixes. Fixed ready threads, XX display after algorithm switching. Updated Ghostwriter documentation, which I think we can see here on those release notes. Fixed CN heavy in 32-bit builds. Ghostwriter set correct priority for helper threads. RandomX, don't restart mining threads when the seed changes. Ghostwriter added support for client.reconnect method. Fixed short responses from some Raptorium pools. Fixed Ghostwriter benchmark on single core systems. So I think there is a Ghostwriter benchmark now. Oh, I didn't even know that there was one yet. So that's good. I'm excited to see that. And fixed ARM v7 compilation, and Kapow OpenCL use separate UV loop for building programs. So there's pretty much all of the information you're going to need. Always check the signatures here when you download it. Make sure you're not getting the incorrect version, and so on. So some exciting news for, I guess, YouTubers or people that test hardware. It does look like there is a Ghost Rider benchmark that we're going to be able to run. I've always enjoyed not only the benchmark, but also the benchmark, I guess, repository that XMRig has on their website. It's always fun to pop in there. It's almost like a little competition to see if you can get a better hash rate on any given CPU than what's already out there. So that's pretty cool. I like that. Let's go ahead and talk about the big subject for today, though. Ethereum Foundation kills ETH 2.0 in favor of consensus layer rebrand. All right, so I haven't fully read this article yet. This was shared with me, and so by a viewer, I can't remember what the name was, so apologies there. It's written by Jeff Benson. It's on decrypt.com, and we already went over the title, so here's the brief. Tactics have changed since the Ethereum 2.0 roadmap was first developed. Developers are changing their terminology to reflect these shifts. So the good news for developers is that the next time someone, usually a reporter, let's zoom in here for you guys, usually a reporter asks them when Ethereum 2.0 is coming out, they'll have an answer: never. The bad news, they'll have to get a bit technical to explain why. The Ethereum Foundation today, following the lead of the blockchain core's developers, announced that the term Ethereum 2.0 is being retired in favor of consensus layer. The rebrand reflects the fact that what's been called Ethereum 2.0 is really more of a network upgrade rather than a whole new network. To be sure, some major things are still set to change. Ethereum is shifting away from proof of work to a more scalable proof of stake chain, and mining, in which high-powered computers connected to the network compete to validate transactions so that they might mint new ETH for themselves, is also on its way out. But some elements of the current network, mainly at the client software level, are being retained and merged with newer components. Henceforth, ETH1 will be known as the execution layer, and ETH2 will be the consensus layer. Whereas the execution layer is where all the smart contracts and network rules reside, the consensus layer makes sure all the devices contributing to the network are acting in line with the rules and penalizing those that don't. Together, the two layers will merge into just plain old Ethereum after the consensus layer is ready to replace the current mining system. As the Ethereum Foundation, a nonprofit that helps coordinate and fund technical developments on Ethereum blockchain, notes in its blog post, this shift all came about organically. Or because they gave up? I don't know. All right. Phase 0 of what was previously called Ethereum 2.0, the Beacon chain, went live in December of 2020. The Beacon chain was designed to coordinate staking, a process by which Ethereum users lock up their ETH in a smart contract, kind of like how people might buy a long-term government savings bond. Almost exactly like that. Sure, we'll take that example to help secure the network. In exchange, they earn a yield on their investment. But the Beacon chain was ready well before other elements of Ethereum 2.0, all of which prompted what the foundation calls, quote, a revival of research initiatives on the proof of work chain, end quote. Ultimately, developer Danny Ryan posited a way for current Ethereum client software to hasten the move to proof of stake without having to migrate away from the current network. In fact, Ethereum devs have been quietly shifting away from the ETH2 terminology since last summer, as the specifics of the proof of stake move came into clearer focus. Nothing really changes in terms of the roadmap. Staking and sharding to ease network congestion are still on the way, the former projected for 2022 and the latter for this year or next. But the foundation says the rebrand will help avoid scams, such as people getting hoodwinked by those telling them to exchange their ETH for ETH2, while doing away with the impression that the network is completely different. So what did we really learn from this clickbait article that I could get you guys in here and get more viewers in the live stream? What did we learn from it? Well, really not much, if we're actually being completely honest here. What we're hearing essentially is just changing of terminology. And as far as the roadmap is concerned, everything seems like it's on pace. For the miners, that does mean proof of stake sometime in June of 2022. At least that has not been changed. We don't have any confirmations or any evidence of that being changed at all. We have essentially a redefinition of the different layers. So basically a consensus layer and an execution layer. What will happen essentially is everything that's being executed via proof of work right now will end up being confirmed via the consensus mechanism of proof of stake once it's merged into, I guess, not the beacon chain, but with the beacon chain with all the shards. My understanding is this layer, which I guess we can't call ETH1 anymore, is going to essentially join the remaining shards, and then it'll move into proof of stake. But as far as the functionality goes, here's what's weird that I'm not quite clear on, and I'm going to do some more research on and try to get you guys some more info later on. Because when I read this, to a certain extent, it doesn't sound like the execution layer is going to scale across the remaining shards. It sounds like it's going to just stick on this one OG Ethereum chain. And that's kind of interesting. I assume you're going to be able to build out and pull info from other shards, and that in theory should allow for more scalability. I think another point about this is it's going to be less likely that you have big impacts on layer 2 solutions like Polygon Matic. From a fee perspective, I'm not sure if this saves anything or changes anything. It's really going to have to be put into place before we can see if the fee problem is resolved. As far as I understand, of course, EIP 1559 is going to stay in possibly. We do see, of course, EIP 1559 implemented into Polygon Matic, which was a little bit of a disappointment. In my humble opinion. I know some people disagreed with me in the comments, and everybody, to each their own for their opinions, and I appreciate those opinions. We could have a more in-depth conversation about that, and I think we should later in the future, of course, especially as it revolves around the burning of assets post-release. In the past, just from my perspective, if we're talking about burning of assets, it usually gets tied to some sort of pyramid scheme. We're talking about like the automated liquidity coins. I could go into a list and start hammering them, but then I'll end up with a whole bunch of tweets at me for spam, and I just don't feel like it today. That's that's just how I feel about it. Now, another thing here is like, obviously, we have the Ethereum Foundation to talk about too, because if we're going to be moving to proof of stake, or if Ethereum is going to be moving to proof of stake, one of the things that you should consider right now is a majority of the staked funds are from the nonprofit Ethereum Foundation. And that is a little worrisome because it means that the general public doesn't seem to have a ton of faith within Ethereum, as they should not, because I mean, you are talking about a pretty hefty investment at 32 ETH to run your own staking node. And if you wanted to do, basically like a staking pool, I know that ethermine.org is working on one, right? And there are others out there that you can start getting into and participating in. One of the worries there is that, like, for the most part, as far as I can tell, still to this day, you don't really control your keys in those scenarios for those staking pools. So you have a higher risk for your investment, and that's going to be a little sketchy for anything under 32 ETH at this point. I think you'd be better served staking, something else that's a little cheaper, maybe on its way up. I don't know. maybe being added to large projects like OpenSea. I don't know, anything like that, right? So, and speaking of that, of course, just for those who aren't aware, Solana has been added to OpenSea, or is being added to OpenSea here shortly, which is going to be a pretty big deal. I did want to talk about OpenSea and my thoughts on it, because I did get replies, referring to, of course, the NFT problem of the right click and save and re-upload to OpenSea to sell. One of the things that OpenSea hasn't implemented into their systems is like a checking system to make sure that your art or whatever given piece of art hasn't already been uploaded to the website. Pretty much all NFT projects do have this problem in general of course, the right click and save. That's kind of going to always be an issue. But what some other platforms do is basically have sort of a copyright system to where if somebody re-uploaded, like, I don't know, the design for my shirt, it would catch it and it wouldn't allow them to upload it at least to their specific website. That being said, I want to say it's like 70 to 80% of all NFT transactions are on OpenSea. So if OpenSea adopts something, then it's a big deal. The fact is that if you want to sell NFTs, OpenSea's where you get a majority of the eyes. Does that mean it's perfect? No. I'm just saying from a project standpoint, it's the same reason I'm on YouTube and not necessarily focused on Library, because while I post on Library and I'm available on Odyssey, the number one place for me to get more viewers is on YouTube. That's the way it kind of works. Does that mean YouTube is perfect? No, not at all. But it does mean that for all intents and purposes, I need to use YouTube to grow a YouTube channel, but a video platform and an audience, right? That's what we have to do. So that's kind of the idea behind the whole OpenSea thing and the importance of their adoption of pretty much any project, whether that be in the future things like the Ergo NFT platforms or like whatever. We could get Ravencoin, Flux, whatever it may be. Okay. Let's go ahead and talk about miners remaining unfazed by crypto sell-off. I think that it also says here to expect more moving averages, I think. This is coming from CoinDesk. So miners remain unfazed by crypto sell-off. Expect more M&A. While some miners may face difficulty raising equity or staying as profitable, many feel confident they can navigate the current downturn. I think I'd agree with that. The stocks of publicly traded crypto miners have slumped amid the recent sell-off in Bitcoin and the broader market as the U.S. Federal Reserve prepares to raise interest rates. However, industry participants remain optimistic about the sector's outlook and see the potential for consolidation among the miners. Among the crypto-linked stocks, crypto miners are most exposed to the price movements of the digital asset they mine. We've talked about this before. If you're going to invest in a stock in a company that is mining cryptocurrency, you now have additional points of failure as opposed to if you just invested in cryptocurrency. That's why I advise against it. Like if you just invested in Bitcoin, for the most part, your point of failure in your investment is just Bitcoin. Now, another point there, of course, is I don't consider Bitcoin or a cryptocurrency in general an asset because it doesn't generate revenue. Now, if you're running like a node on like a proof of stake coin, maybe I would consider that an asset. That's just now not technically sound, but that's how I describe asset and revenue generation as paramount compared to, traditional investment strategies. But just to be clear, this is the problem when we're talking about investing in companies that are mining cryptocurrency, because not only are you going to experience a downturn for the cryptocurrency itself, but you also have the potential of the company going under because it doesn't understand maybe cryptocurrency in general. I think an example would be Hut 8's PR team saying that once ETH moves proof of stake, they would just move on to mining Matic on like general mass media. I think it was like MSNBC or CNN, meaning like I wouldn't trust the majority of these companies to navigate the space quite yet at this point, but that's just my 2 cents on it. Given the recent carnage in Bitcoin and other cryptocurrency prices, some of the stocks have lost more than 50% of their value since their peak last year. Verity Cleaner Energy, crypto mining and semiconductor ETF, an exchange traded fund with heavy exposure to miners, has fallen more than 60% since its November peak. The slide coincided with the price of Bitcoin. Oh, really, did it? The largest cryptocurrency by market capitalization, at one point falling more than 50% since its November all-time high. The miners and overall market saw some relief heading into Wednesday's U.S. Federal Reserve policy statements, which apparently is a big deal that we need to cover at some point too. So, moreover, with fear ruling investor sentiment, the access to capital that miners enjoyed last year has somewhat dried up, particularly for the companies that have recently gone public or are planning to do so. Most recently, Bitcoin miner Rhodium Enterprises, which we have talked about a lot, postponed its initial public offering, its IPO, that valued the company up to $1.7 billion due to market turbulence. Quote, miners that are more dependent on equity may struggle now because the markets aren't as bullish as they were, end quote, said Matthew Schultz, executive chairman of Bitcoin miner CleanSpark, CLSK. Furthermore, the Bitcoin network's hash rate and difficulty recently reached all-time highs, making it harder for miners to earn rewards for validating transactions. This is because all you greedy are going in there and borrowing a ton of money from the public, telling them they're investing in cryptocurrency and buying up all the hardware on credit. This is what happens. I really honestly have no sympathy for these large companies that do this. However, miners remain unfazed by the crypto market rout, as most are still making healthy profits, even as Bitcoin hovers around $35,000 levels. The current price of $30K does not have a significant impact on the economics of Bitcoin mining, given that the cost to mine a Bitcoin for most industrial scale mining operations in North America is much less than that, Schultz said. While miners that have higher costs are likely making less profit at the current Bitcoin price, those profits are still not as low as in the most recent bear market that began in 2018. During that bear market, hash price hit a floor of 7 cents per terahash a day, according to Yuri Bulovic, head of mining at Foundry. Foundry is a subsidiary of Digital Currency Group, which is the parent company of CoinDesk. Moreover, the recent correction seems to be less severe than previous major sell-offs. So what you're telling me is that this article's already compromised, right? That's what you're telling me? I'm just sorry. That's what it sounds like to me. Moreover, the recent correction seems to be less severe than previous major sell-offs, according to Fred Thiel, CEO of Marathon Digital, one of the largest publicly traded miners. In prior bear market cycles, there was a 70% decline in the price of Bitcoin in 2013 and about an 85% drop in 2018. One reason for this is that the current down market has more institutional investors investing in crypto-linked stocks, which reduces volatility over the longer term, Thiel said. Interesting. So he's saying in prior bear markets, there was a 70% decline and an 85% drop in 2018. The current down market has more institutional investors. That's all stuff we knew. Okay. So, all right. All right. I'll tell you what that means to me. Just so we've talked about previous bull runs or super cycles. And how, for example, if we followed the exact pattern, we would expect the lows to be of this cycle to be the previous cycle's highs. The factor here that changes this, meaning I think that we probably will see, at least if I read this, if I believe that, and I also believe in institutional investing, taking that into account, I would assume we would see 15% hires or 15% higher highs this super cycle than we saw previous super cycle, I think is how I would read that. We'll discuss it, of course, in chat here in a bit. But consolidation. To be sure, a prolonged bear market will have some negative impact on the market. The miners who have access to cheap power and newer, more energy-efficient mining computers will be able to rise to the top, while less efficient miners may feel some pain, said CleanSpark Schultz. Such a down cycle will also change investors' appetite for risky assets, limiting access to capital for public and non-public miners. In this environment, I think you should expect to see a certain amount of consolidation in the mining space, said Marathon's Theo. In a relatively young industry with rising competition, expansion is one of the keys for miners to remain profitable. And this is something that, we've talked about previously. While I have said currently, pause on hardware, I'm specifically talking to people that are like me, that are smaller, that we need to make every dollar count. Maybe you are taking out loans. Me, for example, I'm personally not taking out loans. So every dollar counts. But it is important to note, even at the smaller level, that to compensate for lower prices, the best thing you can do is accumulate more hardware. Because at that point, you're just compensating for the downturn, but you're keeping your revenue where it was previously. So unfortunately, between let's say October of last year and right now, you would have needed to almost double your farm size to maintain the revenue, which is just insane. And I'm not there. I don't know where y'all are at, but I am upgrading my power so I can theoretically triple the size of my farm. I still have to work on getting the capital, and it's going to be a little bit difficult to do that, as I'm sure that's what a lot of y'all are dealing with too. Because we're not going out there and getting public funding, right? So let's go through this more. Let's see. However, with limited access to capital, M&A will likely become more pronounced among cash-strapped miners to fund growth or production goals. And miners that have orders for new machines but haven't been able to deploy their rigs yet, as well as companies that don't have the capital to pay for their machines they have already ordered, could become attractive for potential buyers, Thiel said. And this is a valid point that is probably good news for people that aren't running massive Bitcoin mining operations and just want to get in at a, non-greedy level, right? Maybe just more of I'm getting into this now as a small business. It's possible that a lot of these companies have placed orders for Bitcoin miners from Bitmain that they can't afford. And the good news is maybe that means the regular Joe, like myself and y'all or whatever, at the lower income levels to middle income levels or whatever, are going to be able to purchase ASIC miners because they'll flood onto the market. That would be the ideal case. Because also what that means is it provides more decentralization. Because it's better to have fewer miners in the hands of more people than more miners in the hands of fewer people. Okay, that's the goal here if we're talking about decentralization. That goes across everything. If you hear the term decentralization from somebody, always press them on basically how the distribution is functioning for whatever the consensus mechanism is, or in the case of something like Web3, where the actual hosting of the data is. These are important things. That's why when I did the interview with Daniel Keller, I specifically asked, how much is on a VPS for your nodes and how much is being run on bare metal. And that's an important note because the more that's running on bare metal run by individual infrastructure providers compared to the amount that's being run on AWS virtual private servers or Azure or even DigitalOcean or Vultr, that number is important when we're talking about decentralization. So this could be a net positive if in fact there are a bunch of pending orders for Bitmain, Antminer, S19, whatever it was. I can't even remember what we're on now. XP, is that correct? Maybe those orders are going to fall through and it's going to go through to multiple people. We'll have to go ahead and figure that out. So that leads us to buying opportunity for longer term investors. The recent pullback in stocks of crypto miners might present a buying opportunity, said Wall Street investment banking firm D.A. Davidson's analyst Christopher Brendler, in a research note. Quote, "We see this as a healthy correction, reducing leverage and speculation without overly painful volatility," end quote. I think I would agree there. Brendler added that at their current valuations, crypto mining stocks have, quote, materially better risk reward despite investors' concerns about how companies will fund their growth plans. I disagree there. Quote, "While access to capital to continue investing in growth is a concern, it is much better now than even just 6 months ago, and we're optimistic about a near-term recovery in Bitcoin," end quote, Brendler added. Marathon Steel likewise remains bullish on the longer-term prospect of the mining sector and Bitcoin as a whole. Despite short-term volatility, I'm still very optimistic about long-term growth, prospects of the industry and Bitcoin, and for what all the good that Bitcoin is going to bring to the world, end quote, he said. All right, so I think at this point I addressed pretty much everything in this article that I agree with, I don't agree with, and we're kind of going on from there. Let's go ahead and talk about mining profitability. It's a little down from yesterday. I think we were at 220 USD. We were at more ETH for sure at 0.09 ETH, almost 8. It was 0.089 ETH on the farm. I did push a payout specifically because I was trying something that I absolutely failed at. And you can see here, I sent 0.3 ETH to a contract that I built myself within Solidity. And I really jacked it up. So I'm going to be trying to get some help from Solidity programmers. I'm not a developer, but I was trying to do some GitHub pulls for an arbitrage bot to test it out. I saw like some people, how they were making them work. I was like, I can do the scripting. It makes sense. And I failed. At least I think I failed. It may not be lost yet, but I'm going to need some help. So if there's any Solidity programmers in there that have essentially any experience with these bots, let me know. I have some questions. Regardless, it's a learning experience. I did deploy it on, well, I'll go into more details once I understand what I'm talking about better. Okay. As far as like testnets, deployments, and etc. So we'll go into that later. Let's go ahead and continue mining profitability. I'm learning though, but the good news is I learn. And then I try to teach you all, so hopefully y'all don't have to make the same expensive mistakes I do. All right, an RTX 3090. Ethereum is in first place at $3.59 after 10 cents a kilowatt power. And we have Cero at $2.23 a day after power. Ergo moving up $2.29 a day after power. And then we have Tent following that with Conflux, Ryo, which is a dead coin, Ethereum Classic, Ycash, Cortex, and Flux falling down pretty far behind at this point. Of course, if we adjust the solutions a second properly, Flux looks a lot better. So I want to make sure that was in. Yeah, Flux moves into second place at $2.33 a day with proper numbers. On TON, this coin has low volume for. Okay, I did sell a lot of TON. Maybe that's my fault. Look, I was trying to test shit. $2.38 a day after power, which does put it above Flux though. But you have a low 24-hour volume, so keep that in mind. Your best bet for selling then is to save up until you can pay that 5 TON fee and just swap it on something like Binance Smart Chain, etc. Okay, let's see here. So, do we have any huge changes? Has it recovered? It looks like the hash rate has fully recovered and even increased since the power shutoffs in Kazakhstan. Let's check Ethereum, the big daddy of proof of work mining for GPUs. Really no significant changes in difficulty, just always kind of ticking up a little bit more and a little bit more. It is at 995 terahash a second, which is, it's getting crazy, boys. Let's go ahead and check Raven Coin. Make sure we keep an eye on that since the halving. It looks like difficulty's starting to settle out. I'm going to assume that this network hash rate that it can handle post-halving right now is around 4.5 to 5 terahash a second. I'd expect it to sit closer to 4.5 for a while. And then I think it looks like we're settling out. So profitability on Ravencoin should start kind of becoming more clear right now as to what it's going to be. Let's check Flux. Do we still have pools off Flux? We have one pool that is still not updated on Flux. We are down 0.2 mega solutions a second from previously to Sunday. So the network's pretty much fully recovered, but there's still a couple of 0.2 mega solutions that are offline. Difficulty did drop. It does look like it's actually recovering there at the very end. You're coming back, right? Yeah. So there you go. As far as Flux goes, let's go ahead and check Ergo. I was hoping that I would see a whole bunch more people moving to GetBlock. What are you guys doing? We talked about why you should do this. GetBlock is supporting individual miners to make votes. Now, I was supposed to have an interview with some of the team from Ergo today regarding the votes. Unfortunately, they're a little busy. I'm trying to reschedule for either tomorrow or Friday. Hopefully, I'll get an interview with them sorted out and we'll talk about all of the details. At this point, it's a little up in the air from my perspective. I'm not exactly sure when the vote will go in. Actual confirmations on pools that are against and for, of course, EIP 27. As far as I understand right now, EIP 27, which is going to change the monetary policy of Ergo by decreasing the block reward and resending it to a contract that will pay it out after, I guess, proof of work mining or the block generation is done, to extend essentially the rewards for mining beyond that, because there'll be enough people on the network, hopefully, past that to compensate with fees. All that stuff, I'm still waiting on confirmation for. Hopefully we'll get that up for you guys soon. All right. Mining pool profits for the day on Ethereum. Crazy Pool in first, Mining Pool Hub in second, and Flex Pool in third for the last 90 days. Last 60 days, Crazy Pool in first, Mining Pool Hub in second, and Flex Pool in third. Last 30 days, Crazy Pool in first, Mining Pool Hub in second, and Flex Pool in third. Last 21 days, Crazy Pool in first, 2 miners in second, and Mining Pool Hub in third. Last 14 days, Crazy Pool still in first, 2 miners in second, and Ethermine in third. Last 7 days, we have Crazy Pool in first, Ethermine in second, and 2 miners in third. Last 3 days, Crazy Pool in first, Flex Pool in second, and Ethermine in third. And for the last day, Flex Pool has taken first with Ethermine in second and 2 miners in third. And Crazy Pool dropping to the bottom there, it looks like. which is interesting because everywhere else they were more profitable. Let's talk about this chart real quick though. A lot of people, look, I have mining pools reach out to me all the time. Not just one, not just two, pretty much all the mining pools reach out to me. My understanding is that thanks to y'all, we are pushing gigahash, like straight up gigahash on Ethereum, and tens to hundreds of gigahash from pool to pool if it's featured on the channel. That is not my intention. My intention is to explain to you guys a few things. First of all, your profitability is going to vary across mining pools on each individual level in the chat. User A, or I guess let's just go with some names in chat here real quick. Real PC Benchmark may get something different than Robert. And the reason for that is going to be your latency to any given pools. We've talked about reducing stale shares and the importance of that over almost everything else. And you need to be positive that you're going in and like testing these things out on your own. We have videos that show you guys how to do it. Another note about that, it's also why I do not and will not, under any circumstances, take pool sponsorships, okay? We're not going to do that, and we're not going to do coin sponsorships. The reason being is because it's too unethical in my humble opinion. And so if you are a pool and you want to reach out to me, I'm glad to chat about things like policy, like with GetBlock or whatever, and their voting policy, maybe some new innovations to the way the pools are running. I'll cover it, but I'm not going to put an ad space up for a pool. I am not going to just mine to the pool and then pretend that that's what I'm doing for some sort of additional payment. It's not how it's going to work, okay? Out of the way, done with that. Just want to make that clear. So that's where we're at. Let's go ahead and talk about ASIC profitability for the day. The gold shell KD6, 111 a day. Pretty far down as far as I can see. We do have the Inosilicon A11 at $83 a day. And then the KD5 coming in after that at $75 a day. So pretty much you're still looking at the ET hash and the Cadena ASIC miners being at the top with, you know, script falling in down here. I still don't have proof of an L7 in existence, which really frustrates me. The D7, I do know you can pick up. And then if we're looking at the S19 Pro is the best profit for Bitcoin. I mean, it's down 50% too. So it's not just Ethereum that's down 50% for mining profitability. It's Bitcoin as well. If you remember just a little bit ago, these Antminer S19 Pros were doing like $30 to $40 a day. So don't worry about it. If you were worried about, oh, I should have made the shift to the Antminers yet or sooner, maybe not, but maybe that shift is there. Maybe you need a little bit of a split. Maybe Flux is going to be prepared. I don't think they're going to be prepared by June, in my humble opinion. I didn't get that from Daniel Keller. I know that they're working on being prepared. I just don't think June is going to be prepared for the amount of hash rate coming off of Ethereum. That's just how I feel about it as far as that goes. Have we seen reduction in prices on ASICs yet in the ASIC market? In the used one I have, for miners through like BT miners, I don't think that we have seen, I'm not seeing any price adjustments here except for on this What's miner. This actually looks like a pretty good deal. This is down from 4,800. Let's see what the What's miner's doing. That's the M21. M21, $4 a day. Nah, bro. I mean, that's like 1,000 days, right? So no, unfortunately, the price did go down. So we are seeing a little bit of an adjustment there, but not enough. Not enough. The Gold Shell X5, is that a price cut of $200? That's the X5S. We want the old X5, $339. I mean, that's still, I mean, not quite 20. That's a little bit better. 2,300. 389. That one's a 2-year, like 600-day payoff. It doesn't look to me like ASICs have adjusted yet quite for the down profitability. I don't think the GPUs have yet either. If you guys are going to email me, look, here's the weird thing that I keep getting. I feel like everybody that actually watches the channel knows what I'm willing to spend on GPUs at any given time because I'm very clear about it with y'all. But don't email me with your, can you buy my rig for $22 a mega hash? The answer is no. I'm kind of getting tired of even replying to those emails. I can buy new cards right off the shelf for $15 a mega hash. And I'm not even doing that. Okay? Just stop it. Stop it. Stop it. All right, let's get into questions and answers for the day. Look at that camera bounce. I really do want to fix that. Apologies still, it bugs me a lot. All right, we have quite a few super chats I want to say thanks for. Looks like the message was retracted, but we have $50 in MX coming from D. Stiggy with 50 knock. Has your life changed after you became so rich and famous? I'm not rich, maybe famous. And yes, it has changed for sure. Look, life's a lot better doing this. I'm hoping that I can make it through this bear market. I'm not actually positive that I can, though, to be honest. I've been pretty vocal about my revenue. So if you watch enough of my videos, you can probably figure out exactly how much money I make. Pretty easy. Mining profitability really bad right now. All right. Another 50 MX from D. Kai Rect, welcome to the Suns. Thank you for joining the channel. And Real PC Benchmark, thanks for the €2 for that pump. Pump it up. Pump it up. You remember that game? That game was a knockoff of DDR, which was Dance Dance Revolution. And there was kind of a cheaper version that had 5 squares instead of 4. And it was called, and it had 1 in the middle and then 3 around the corners or whatever. And it was called Pump It Up. And the little, so if you guys didn't know, my parents owned an arcade / miniature golf course when I was growing up in high school. And so I ran that. And one of the games we had was the Pump It Up. And that little intro thing where it was like, pump it up. Stuck in my head for forever. Forever. All right, Robert says, at Son of a Tech, first off, I love the show and all you do. Thanks, my dude. My man, I got to stop copying Bitsby Trippin'. Here's, you start watching people and then you accidentally just start saying things that they say. I'll come up with something different. Says, thank you. What is your preferred flux miner? You want to put some light hash rate on it soon. Also, what NVIDIA cards are the most successful mining flux? RTX 30 or 20 series, the 2080 Ti by far. Is most consistently the most profitable on Flux, and utilizing Mini Z is going to be the best bet for hash rate, especially on RTX 3000 series cards. Oh, and we should talk about that too. Solo mining, guys. So I do talk about, like, of course, keeping reduced stale shares for reduced connection. A lot of these solo miners that are hitting blocks, the big key for them is having very low latency. So if you're going to like solo mine, just keep that in mind. Amigos PC says, Ask Son of a Tech, according to my ASIC supplier, we are still 3 to 4 months away from seeing November's batch of L7 hitting pools. Could be true. Yeah, I don't know. I haven't seen an L7. I'd love a picture of one. A real one, like running. That would be cool. Talon says, Ask Son of a Tech, hey, you want 12 6500 XTs for 300? Yeah, bro, I'll ape into that. Shoot it over now. Henry, oh, thank you. You rock too, my man. Martin says, Ask Son of a Tech, will you be mining? Will you buy my mining rig for $40 per mega hash? Sure, I'm rich. Remember. Trick Guy says, Ask Son of a Tech, which is the next coin to mine after ETH, according to you, for long term? Raven, Flux, Ergo, or someone else? Flux gives me the most confidence. It gives me the most warm fuzzies inside. It seems to be the only one that is actually working on Web3 from an infrastructure standpoint that is actually trying to decentralize it. That being said, I still think it has a long ways to go, because I think it's like, what is it? Hold on. We can look at this, can't we? On the home dashboard. I think we can look at this on the home dashboard here. Let's see. So, is it in the Explorer? Dashboard, overview, resources, right? Or here's an overview, right? So, I'm not actually positive on this, but here's the dashboard. This is Cumulus, Stratus, and Nimbus, but I don't think... I thought we were able to see... Maybe it's under resources? No. Economics, lists... It's really hard to tell, because, like, this is obviously Google Cloud, so if they name it like that, we can tell what's on the cloud or not. I thought he had told me that there was actually, like, an overview that would tell me how many were on virtual private networks and how much were on bare metal or something like a Jetson board, but... that doesn't seem to be the case. From my understanding, we're still like 50% of the nodes are run on some sort of virtual or cloud hosting platform. We'll just go with that. So, still some work to be done. Some Goblin says, Ask Son of a Tech, are you still playing New World? Or you stopped playing that? I stopped playing that. I actually haven't been playing much. Last night, while I was waiting on some confirmations, etc., I did play some more Gods Unchained. I'm enjoying that game. I'll keep playing it. Detroit Iris says, Ask Son of a Tech, if you didn't have to worry about electricity or rent, would you cash out all, swap all to BTC, cash half, hodl, or hodl through the bear market? I probably like... I don't know. The older I get, especially within this market, in this industry, I feel like I'm a Bitcoin maxi, where I'm like, just dump it into Bitcoin. Part of that's laziness. I wouldn't leave it in ETH, though. I don't think. But that's not financial advice, and that's also more of a, I just don't trust ETH. Ben's 310, thank you for the $4.99 for the Flux node setup. Cool. We'll keep saving for that. That's an expensive one, dude. IFTE Emon says, At Son of a Tech, we all know how PLNS, PPS, and PPS Plus can you tell us about prop from Hero Miners? I have talked about prop before. You should be able to Google it pretty easy. Because it's all going to be proportional. Let's see if we can do... Mint pool should have it. There you go. Yeah, proportional. Bam, right there. Proportional is the simplest reward system. Rewards come from rounds, the time between one block found by the pool and the next. You're rewarded for the shares you submit in proportion to all shares submitted during each round, which is actually per block. So, for example, if your shares submit during a round for 50% of the total shares, then your reward is 50% of the block reward. So, benefits, the proportional system is the easiest reward system to understand and implement. Problems, boom, right there, pool hoppers. And the biggest pool hoppers, like, to be honest, are going to be like renting NiceHash, for example. You like rent it for like a single block, you get the most shares, you steal that block, you pop out, right? Everybody else gets screwed, and the NiceHash miner basically runs away with all the money. That's the problem with prop. John Bronson says, at Son of a Tech, Vosscoin made a video yesterday about the U.S. government banning crypto. Is that true or just clickbait? I haven't watched his particular video. I know that not necessarily U.S. government banning crypto or full ban or whatever. I know that there's like people within the U.S. government, they would like to see that. I don't see that being a thing. But I don't know exactly what he's referring to. I haven't watched it yet. Xcraft says, at Son of a Tech, do you CPU mine anything? Not right now. Ted says, at Son of a Tech, what is your favorite pinball machine? The Terminator? Is it Terminator? Yeah, probably Terminator. It's been a while. Where I think there was a Groundhog Day one that was really cool too. Let me see if I can find it. No. I wonder if they even have the old Terminator pinball machine up here. Oh, that's Terminator 2. That's Terminator 3. Huh. I can't even find pictures of the Terminator pinball machine. Damn, that's disappointing. I have the picture in my head, but I don't see it. Womp. Killyfish says, outside of attack, you think BBT Bits Be Trippin' went live not long ago? Sick. Well, we'll have to, I'll check, and if he is live, we'll send people over his way. Am I into privacy coins? I cannot confirm nor deny these allegations. CJ Vic says, at 7tech, I have some RX Space 584 gig cards. You tried to move to Flux, but they failed to mine. Can't figure out if it's the DAG size issue. Can you offer insight? I don't think it's a DAG size issue. The Polaris cards really don't run well at all on Flux. If you recall, I specifically asked Daniel Keller about that. We did not get a clear answer. It doesn't sound like they are going to intentionally try to make them function better with proof of useful work. It was just like a whole bunch of them on will mean something. And it was like, okay, there's no guarantee. Look, if I'm being completely honest, I don't have any players cards. I got rid of all of them, and I'm glad I did. And those are going to be the cards that are going to be worth almost nothing. And I don't know if there really is a path post-merge for Ethereum. I'd get rid of all my Polaris cards. Not financial advice, just what I would do. Patel Hero says, at Son of a Tech, how many ETH do you have? 0. Dan Sand says, at Son of a Tech, do you believe using high memory clock can depreciate your card, even if the card has low 60s temps? I wouldn't worry about memory clock as much as core clock for degradation. But that may be different on, usually you just end up with overheating and possibly just resulting in thermal throttling as it is. Most cards are built in so good these days with their thermal throttling that what you're going to see is a reduction of your mining hash rate, and you just need to replace the thermal pads on the memory modules to regain that performance. Xcraft says, are you going to host a Flux node? If I can. I don't know if I'll have enough funds to really do that. If we're like being completely honest about like trying to take care of a family of 4 as a YouTuber and cryptocurrency miner, it's not easy. All right. I'm just happy that I get to like do this at all. Right. But if you're talking about taking a $3,000 and investing it into a single coin, into a node, I don't have $3,000 laying around right now. I could sell GPUs, but I'm not going to do that. So Lucas says, on the Flux dashboard on the map, you can see who is hosting the nodes. Flux dashboard on the map. On the map. Geographical. Oh, providers. Providers. Oh, okay. So this is what he's talking about. There's unknown of 34%. Contabo GmbH. I don't know what that is. I did see Vulture in here over here. That's a VPS. 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 DigitalOcean, VPS. There's only 7 nodes there. Google Cloud, US West, there's 5. DigitalOcean, another 5. Looks like it gets split up even though so it's not going to give us a full idea, but thank you. Super awesome. I love having that information. I can't analyze it right now necessarily, but Toby says, how's your health right now? Getting better? I'm fine. As far as performance level, I'm doing pretty good. We'll be doing a competition on Saturday for jiu-jitsu. My son's going to be doing it in the morning. Then I'll be doing light heavy masters 1 white belt in the afternoon. Lucas says, that Son of a Tech on the Flux. Oh, yeah. So we got that. Ringstead Hedge says, that Son of a Tech, would you still buy 45 RTX A2000 cards for $510 USD each? Your order is ready 3rd of February. Yeah, I don't see why not. Isn't that like 40 mega hash a second? Super efficient. And I think they'll work really well with Flux too. Yeah. Seems good to me. Raul Dixit says, ask Son of a Tech, how frequently do you sell ETH? Daily, weekly? As soon as I get it. Victor Sanchez says, ask Son of a Tech, are you going to go through the Eden through the Eden network. I don't know what that's for. Gettr Blaze says, hello, Son of a Tech. Do you know of anyone that runs their own servers on Flux as of now? You can't find any examples that's not a VPS. Well, if you're running a bare metal server and like you're already familiar with virtualization, say like using like VMware and like standing that up, or even whatever, doesn't really matter. You're going to be pretty familiar with Linux. You're going to know where in the VPS guide to start, because you're still just going to be at the same point in the VPS guide. You should know how to deploy an OS to your virtual software or VMware at that point. So a step-by-step guide may not be something that they do. At the same time, I could see where the value would be maybe for like a YouTube channel to cover it. I've already covered a lot of like standing up servers and stuff. They don't get a lot of clicks. So Daniel Keller runs Flux nodes bare metal. Ron B, thanks for the $10. I'll save it for a Flux node. Techie Rod, what's going on? Good to see you, man. Ringstate already answered that for you. Let me see if I missed anything. Julian Richardson says top 3 favorite video games of all time. Deus Ex, Gears of War, Deus Ex, Gears of War, the original Deus Ex. I don't know about third. Probably StarCraft. Craig says Fed just went live. Are they going live with the cryptocurrency stuff or what? And then I'm checking for Bitsby tripping here too. He's not live anymore. Let me check my subscriptions and see. I don't see any crypto YouTubers live right now. I follow all of them. You forgot to add about the controversy of the Eden network regarding rewards not given to miners by pools. Oh, I haven't read up too much on it. Talon says, outside of a tech, I bet your node setups and other videos will get a second life once people start seeing the benefits. Of course, of course. Hash Dealer says, outside of a tech, any chance you do a tutorial on running a mining pool? Probably not. The risk is really high there if you're not staying really, really secure with your settings and so on. But maybe like standing up a node to solo mine or something. Sean Peterson said, join late, have limited time. Son, can you quickly sum up the ETH 2.0 thing? Oh, yeah. Ethereum is just changing the naming scheme to consensus. What was it again, guys? They're just, here you go. 2 lines. Tactics have changed since the Ethereum 2.0 roadmap was first developed. Developers are changing their terminology to reflect these shifts. Essentially, Ethereum 2.0 is no longer a thing. It's all just Ethereum 1.0. And the change is going to be, of course, that proof of stake change we're talking about. And there will be 2 layers, the execution layer, which is what is currently known as ETH1, and the consensus layer, which is currently what's known as ETH2. being said, what that means to me is they're just taking everything and moving it over to, you know, basically as another shard within ETH2. What does bandwidth? I'd have to look at the stats you're talking to, Iman. I'm not exactly sure. CJ Vic says, at Son of a Tech, you should cover the Fed meeting live with your commentary. I actually have to get going. We're going to drive to Houston, guys, and get you the 3050. And we're going to try to go to the aquarium while we're there. I shouldn't tell you all that, should I? I just thought about that. Maybe we'll go somewhere else. The zoo. I gotta try to beat you in the rig on StarCraft. I'll play. Actually, what I really want to do, guys, is I want to set up a Age of Empires 4 thing. I haven't even played it yet, but I really want to play it really, really bad. But Rent Free says, hey there, son of a tech, in all capitals. Could you check your IG messages sometime? I don't have an Instagram, so you got scammed. Try email, bro. Tommy T says, at son of a tech, thoughts on increased CPU mining profits post ETH? No change. When Brew of Stake starts, there will be a value of 0. StarCraft was so... I wish I was still good at StarCraft. Every time I go back in StarCraft, I'm like, my fingers don't do what they used to. Yeah, Renfrey, be careful out there, guys. Scams everywhere. Follow my official Twitter, at Son of Tech. That's where I'm most active. Rocket Chat, obviously, that's where DMs are going to take place, that sort of thing. I try to reply on some Facebook, but to be honest, most of my Facebook stuff is just spam comments from people, so I ignore most of the DMs there. The reason I use Twitter a lot is because DMs are blocked unless I follow someone. I'm pretty good about, if you ask me to open DMs, I'll follow you on Twitter to go ahead and have a DM. But then I also still have that option of unfollowing you and blocking DMs. That's where I feel comfortable for that sort of thing. And that's just the way it is. Yeah, I want to play the new Age of Empires, especially on this screen. But we're going to call it today, guys. It is already 1:37 p.m. Central. I got to go. We're going to get on the road. I want to make sure that everybody's happy-go-lucky, though. So let's see if we have... I don't know. Let's see if we have anybody that we can, like, shoot people over to that's, like, crypto-related. Do you guys know anybody? Witcher, just chatting. Oh no, let's look at crypto. I don't trust a lot of crypto channels, to be honest. Age of Empire 4 isn't bad, but AO3 is your favorite. All right, dang. Well, don't spoil it for me. Yeah, it looks like everybody's watching the Fed thing. I don't see anybody that I watch necessarily doing anything. Interesting. trying to catch up. Oh, is Branding Coin live? I don't see Branding Coin live. I don't see Branding Coin live anywhere. Yeah, BBT's already done with his stream. No, Branding Coin's not live. How about just a random gaming stream? Hey, quiet! Quiet over there. I don't even know these people anymore. You know what I don't do anymore? Twitch. I don't do it anymore. See a solo miner with 6K souls. Is that an ASIC miner? Probably not. Hash and Dash. But thank you for the $5. Glad you enjoyed it. Is her stream up? I'm going to see if this stream is up. Nope, it's not. Of course it's not. Why does everybody play Fortnite? Gross. I didn't see the chump change reveal. What was chump change revealing? What was chump change revealing? A farm? Bjorn Ironside from the Vikings. I don't even know what that is, Iman. Fed to raise interest rates in March. Hold on to your wallets. It's about to get bumpy. USB miner hit a block for 215,000. I saw that. I saw that. I don't see a real reveal from Chump Change. Like anything interesting. He's talking about GPU mining profitability being down. Just that sort of stuff. A new Octo miner? Oh, okay. Fortnite. Fortnite. What are y'all on about? All it does is make kids have bad attitudes. That's all it does. That's all it does. Here, let's just go over here since you guys like it. The hobbyist miner, okay. What did the hobbyist miner put out? You guys, I gotta drive to Houston. I'm looking. Yeah, we were late today because I was up late trying to do that arbitrage shit and failing at it. Mining farm cooling solution or what? This one? I'm not going to stay live till 9:30 p.m. I'm so confused. I'm so confused. Yes, I have an industrial rate. All right, let's go over here and tell her hi. Tell her the Soat Goats sent ya. We'll support a small streamer creator that's a parent. Thanks everybody for hanging out today. I'll see you in chat over there for a little bit before I head off. Let's support smaller creators. I'll see you next Tuesday.